lot of people think that I'm against real estate, but if it is somebody like you, I'll be like, what you're doing is fantastic. How to pick a good real estate investment, because you said generating 15 to 16% capital appreciation is possible.
First of all, when you're buying, you have to know Dubai market quite well. So a basic salary, let's say 20,000 dirhams in Dubai, you could get 84 times your monthly salary as mortgage. So he can get 1.6 million dirhams, right?
How much does a partner in a major consulting firm actually earn?
Senior partners make more than $1 million.
8 crores and you keep everything to yourself, Hegde. This is why I always feel poorer every time I come to Dubai. You don't put anything in the Indian markets?
I do not put anything in Indian stock markets. You know why? Because...
But how exactly do you do your research?
So I think I'll be very, very specific here. So first of all, seeds.
If my podcasting doesn't work out, I'm applying for a job with you.
Hello Habibis, welcome back to Dubai. In this episode, we are in one of the most premium villa communities of Dubai. As you can see here, there is not a single apartment inside. Every single house over here is a villa, meaning every single person living here is a freaking millionaire. Now the person that I'm talking to in this episode is an Indian millionaire who has migrated to Dubai. Let us find out everything about his journey. How exactly was he able to build this dream life? Make sure to watch till the end if you want to learn how exactly he did this. Let's go. This is beautiful, man. This is like what every person dreams of.
Playing paddle, there's a basketball court out there.
Your paddle court is right behind the house.
Yes.
Beautiful. All right, Paritosh. I don't think people know you yet. So for those of you who don't know, guys, Mr. Paritosh is a partner at one of the largest consulting firms in the world, Arthur D. Little. He has built his dream life here in Dubai and he keeps telling me to move to Dubai. So let's find out, is it really worth? I'm already convinced halfway, but let's ask him a few more questions before taking that decision to move to Dubai. So Mr. Paritosh, can we go to your house and do an interview with you?
Certainly.
Let's go, guys. Let's go. All right, Mr. Paritosh, welcome to my channel.
Thank you.
So Paritosh, before we sort of start looking at your current lifestyle, right? You've been working for how long? 20 years?
Yes.
20
around
years.
18 years.
18 years. And you're from India.
Yes.
So let's start with the basics, right? I want to know the beginning.
I grew up in a small town called Bhilwara in Rajasthan.
Okay.
So that's where I studied till my 10th standard.
Okay.
And after 10th standard, a lot of my friends just went to Kota, which is the IIT factory. So I spent 2 years in Kota, my 11th and 12th. And that's where I, after dropping a year, I got a rank of 176.
Wow.
In IIT JEE.
176 rank, all India.
All India rank, yes.
Wow.
And thanks to that, I was able to do engineering at IIT Delhi. And just like a lot of engineers, I never pursued engineering. I right after IIT, I took up a job in analytics, right? So, and worked in analytics for nearly 4 years till 2011. And that's when I decided to do my MBA. I did my MBA from IESC Business School in Barcelona, in Spain.
Wow. Very nice.
Yes. And
so just a quick question. What is your GMAT score?
710.
710.
Yes.
Got it.
But those 2 years were the absolute best.
I'm sure. Barcelona, I mean, come on.
Yes. So, see, one of the reasons I did my MBA from Spain was I loved Europe and I wanted to continue living and working in Europe, right? And Spain was a great place. I loved a lot of other places as well. And I did. So it's end of 2012. I did land a job in a consulting firm in Barcelona itself.
Okay.
And when I was about to join this consulting company, they said, actually, we don't have any projects in Barcelona at the moment. Also, we don't have anything in Singapore. So they said that, okay, just go to Dubai for some time because we have a lot of projects there. And after a year or two, you could come back to Barcelona.
Okay.
Like people come to Dubai, think that, okay, they'll stay for a year or 2 years, they'll make some money and then they'll go back. But they're
Correct.
never able to go back, right? And I really laughed because I was like, certainly I'm going to go back to Europe. I really like that place, right? And here we are, almost 13 years down the line. I'm here and I hope to spend the next 13 years as well.
So that's how you came to Dubai.
That's how I came to Dubai. I started as a consultant here back in 2016. So I'm just completing my 10 years with the company in a couple of months.
Wow.
And so I grew from a consultant to manager to principal and to now the partner.
Wow.
And
in like less than 10 years, you become a partner at a major consulting firm.
Yes. Yeah.
So just out of curiosity, how much does a partner in a major consulting firm actually earn in Dubai?
Sure. At a partner level, you have a certain fixed salary, but then you have a very large variable component as well, which depends on your performance. In the case of a partner, your performance is majorly driven by how much projects do you sell, right? Because then you have these teams that would deliver.
Right.
Right. So relationships building, selling projects, right? Leveraging the expertise that you've built over the years, right? So now if I take both the fixed and the variable components for people in major consulting firms, and consulting also, as you know, there is management consulting firms, there's technology consulting firms, there's audit and tax consulting firms, but talking specifically about management consulting firms, junior partners, they would make, let's say, in Dubai, you talk in dollars because dirham is pegged to the dollar. So I would say junior partners would make, let's say, around 600, 700 US dollars, and senior partners would make more than $1 million.
Wow. So you can make up to $1 million a year as a partner living in Dubai.
Yes.
You're talking about dollars, not dirhams here.
Dollars.
Wow. This is every year, and the best part, zero tax.
Zero tax.
Wow. 8 crores and you keep everything to yourself every year. That's a good number. All right.
Yes. And if I cover more, I would say, like, let's say juniors can make at least $500,000 and senior partners would make more than $1 million, right?
Of course.
And again, depending on your performance, you would earn as much as you perform, right? Junior partners, if you continue performing over a span of 2-3 years, they can keep progressing to the higher level, right? In some companies where there are 2 levels only, it takes maybe 5-6 years to go from junior partner to senior partner. In companies which there are 3 levels, right? Of course, it depends on your performance, but then maybe you could spend 3-4 years at level 1, then maybe 3-4 years at level 2, and then you become the senior.
And I'm very glad I met you last year at the Art of Living Foundation, because if my podcasting doesn't work out, I'm applying for a job with you. Because this seems like a very, very good earning potential with zero tax. So, Paritosh, can you walk me through what your lifestyle looks like? So the people can get an idea of what it really means living in Dubai versus living in India.
See, Dubai is, I would say, the best Indian city.
Okay.
Right. You could live as much of an Indian life as you want, and here you could live as much of a Western life as you want. Right.
Interesting.
By that, what I mean is that, like, if you want to live a very Indian life, you could have the breakfast at Haldiram, lunch at Bikaner Wala, right, and have dinner at a South Indian place. So here you could go to a temple, a mandir, or you could go to a gurudwara. Everything is here. If you want to send your kids to a CBSE school or a ICSE school, you can do that. You don't have to send them to a British board or a IB. So that way, you could live a very Indian life, right? But at the same time, you could live a very Western life, right? So be it in terms of restaurants, be it in terms of entertainment options, at your work as well, it's very diverse, right? Just in my company, there must be people from at least 30 different nationalities. It's very diverse, very cosmopolitan. I really think I've traveled quite a bit. I think Dubai is the most cosmopolitan place in all of Asia. Probably the only places that could compete a bit is probably London or New York. It's so cosmopolitan. And at the same time, there are good schools, good healthcare. I do think Indian doctors are the best in the entire world, right? But at the same time, Dubai also has some amazing hospitals, some amazing doctors. A lot of the good doctors here as well are Indian.
Right.
right? You could take a taxi at 3 o'clock in the night. Women can be on the street at 3 o'clock in the night, and it's very safe. So yeah, you don't miss anything that's there in India. And also, whenever there's an event, right, you could just fly down. Like just some time ago, I had a friend's wedding in Hyderabad, so we just went for Hyderabad because Dubai is so well connected. Because Emirates has its hub here, Etihad has, Air Arabia has, Fly Dubai has, so just so well connected. Now there are flights which go from even smaller towns like Indore and Amritsar and Jaipur, right? So it's pretty much a part of India.
I think I'm going to start applying for my golden visa right now. So you mentioned about investments,
Yes.
right? So let's get into that discussion now. So what is your asset allocation as we speak today? Right. Just give me the percentage figures. What's in the Indian market, US market, real estate. Just break that down for me.
Yes. So see, lately I have I did have real estate assets in Delhi and Mumbai, but lately I've sold those off. So none of my assets are in India, right? And for my financial portfolio, I as a consultant, I always like to follow frameworks, right? Because it just simplifies things and it's easy to remember.
Sure.
So what I call the WISER, what WISER stands for, like R is for real estate, E is for ETFs. I'm quite a conservative investor that way. And S is for speculative. If you want to allocate some parts to speculative things such as crypto, such as angel investing, such as individual stocks. So that's the speculative thing. And next one, it's not exactly an investment, but it's important to have an insurance as well.
Yeah.
Right. So that's what I stands for. And again, a term insurance, definitely not investment linked, right? And the last thing, W, as I went from R to W is to have a will to sort of protect your assets, because ultimately you are building these assets for your family.
Right.
So these are the various things which I think people should keep in mind. Again, then you spoke about the allocation and so on. So the speculative ones, as of today, now I've reduced, it must be less than 10% or so. And I also believe that these speculative assets, yes, you should play, because sometimes some of these investments can become multi-bagger. For example, I had invested in a edtech startup back in 2021 or so. I had invested 5 lakh rupees in India, and within 2 years, it became 2 CR, so
Wow.
40x return, right? So you should play these bets. That's a different thing, that ultimately that 2 CR again went to zero as edtech leveled off. But again, sometimes some of these multi-baggers do can give you back exponential returns. But at the same time, you should be prepared that you may lose all of it, right? So it can give 40x returns, which as it happened, but again, ultimately it became zero. So you should be prepared for that, right? So that's why you should not allocate, in my opinion, more than 10% of your portfolio on that, right? Rest, it's all, I would say, in real estate, which is mostly properties in Dubai, and in ETFs, which is all US denominated.
How much percent is in real estate?
So I would say at this stage, let's say 70 in real estate and 30 in ETFs, right? And it was not like this, but again, currently it is like this, because I do see a huge opportunity in real estate in Dubai.
Okay.
Right. But for the long term, maybe I'll increase the ETFs a bit.
Okay.
If I just quickly close ETFs, how it is, I mostly invest in globally diversified ETFs, so significant percentage of S&P 500, right? The idea there is, the philosophy there is that, on an average over a longer time frame, that will give 10% returns, right?
Dollar denominated.
Dollar denominated, so you don't see the impact of inflation
Right.
on it. And in steady state, suppose you want to stop working, you can withdraw at least 4% from that from your ETF investments, and that could last a lifetime.
Right.
So and that's a very safe bet, I would say, as it's quite diversified. I think of it as like the Indian version of or like the Western version of Indian fixed deposits, right? And then the large percentage, of course, it's real estate
In Dubai.
in Dubai.
So you mentioned 30% is in the US ETFs.
Right.
You don't put anything in the Indian markets? Nothing in the Indian stock market?
No. So I do not put anything in Indian stock markets. You know why? Because, see, I've been living in Dubai for 13 years now. Right. So I, first of all, do not understand the taxes very clearly. What's the tax liability if I invest, when I get some return, right? Second, it's always in the back of my mind, okay, maybe I'll get some returns, but what if ultimately rupee gets depreciated? Because the money that I have here, it's all dollar denominated. So suppose maybe I make certain gains, but again, because of depreciation, I do not, like, the effective gain does not.
So today 1 dirham is 25 rupees.
Correct.
How much was it 10 years back?
It's a great question. So see, when I had come here 13 years ago, it was around 15 rupees.
1 dirham. Okay.
1 dirham, right? So from 15 to 25, that's like 10 rupees, right? Even if we say 9 rupees, so it's depreciated 60% over time, right? So like, if you think about it, right? Suppose back then I had moved 10,000 dirhams to India, that would have been 1.5 lakh rupees, right? Now, fast forward now, suppose I bring that 1.5 lakh rupees now, because it's become 6,000 dirhams, right? So it's depreciated 40%, right? Now, to be equivalent, I should have made at least 40% gains in the Indian market, right? Suppose 2015 till now, if I had not gained 40%, I would have been at a net loss, right? Compared to and I'm talking about just keeping the money in the banks, right?
So basically your money has to work extra hard.
Correct.
That's the way you're looking at it.
Correct. And some people do say that getting this 10-12%, it's easy in India. It's difficult on dollar denominated, people say, right? Okay, people would say that, yeah, there's inflation, but then you make more as well returns, right? In the Indian stock markets and so on. But here is I would say, right, like in banks, if you just keep simply in banks, right, they're digital banks, you could instantly make deposits and you can make 5-6% in banks itself, right?
Okay.
But in emerging areas, if you plan well, like in real estate, for example, here, you could make easily 15%, I would say, returns. So because of these reasons, I don't invest in...
So basically, the depreciation between the dirhams and the INR is about, can we say, it's about 4% per year between...
Yeah, you could...
3 to 4% per year?
Yeah, you could say that, because, if, like, suppose right now it's 24 dirhams, right?
Yeah.
Next year it will be 25. So it'll be 4%, as you said.
Right.
Like if it falls...
So basically 1 dirham is 24 rupees.
1 dirham is 24 rupees. Let's say next year it becomes 1 dirham 25 rupees, right? So it's depreciated by 1 rupee.
Right.
On 25 rupees, right?
Around 4%.
Around 4%, yes.
So 4%. So basically, if you're able to generate 15% returns in the Dubai real estate market,
correct,
you're actually making up to 20% returns Indian denominated.
Correct.
So somebody from India is investing in the Dubai real estate market, they'll get that additional 3 to 4% just from that currency depreciation.
Correct.
This doesn't happen between the dollar, like the dirhams with the dollar doesn't change?
No. So dirham is pegged to the dollar. So always $1 is equal to 3.67 dirhams.
This is why I always feel poorer every time I come to Dubai. So although I'm getting richer in India,
correct,
I'm feeling poorer in Dubai. Right. So if I live my entire life in India, I don't get out of India. Correct. Not a problem.
Correct.
But as a global citizen who likes to travel the world,
correct,
it's actually a risk for me if I don't get some of my money outside.
Correct.
So hence, you being an Indian living in Dubai, you have not invested in the Indian markets because you have better opportunities here.
Correct.
Simply because you get that additional 3% return by just sitting on cash.
Correct.
Interesting.
Correct. And again, there are good opportunities in India for investment for sure.
Right.
But there are good investment opportunities here as well.
So now let's get to the biggest chunk of your portfolio, which is real estate.
Yes.
So 70% of your money is in the Dubai real estate market as we speak today.
Yes.
So for the audience here, everybody has heard of Dubai real estate. They know that it has been growing really, really fast.
Yes.
In comparison, for people, it's like, okay, if I had to draw some parallels here, people also know that Goa real estate market has blown up really well, right? Post-COVID.
But everybody understands why Goa real estate market has blown up, because they're like revenge tourism, COVID, they didn't let us travel. So now a lot of people from Delhi are buying villas in Goa and putting it on Airbnb.
Yes.
There is shortage of land over there. The government will not let you just chop trees and make more land. So people understand why Goa real estate market has blown up.
Yes.
But if I talk about Dubai, a lot of people don't really understand why the Dubai real estate market has blown up. So if you could really talk about the macro reasons
Yes.
of why the Dubai real estate market has doubled and even tripled in the last 3-4 years,
Yes.
that would be a good starting point for us to start this deep dive.
See, the key driver of this growth in real estate prices is increase in population, simply, right? And just to give you some figure, when I had come to Dubai back in 2015-16, it had 2.5 million people. And right now we are standing at 4 million people. So it's been a 60% increase over a span of 10 years, 60% increase. And it's projected that over the coming 15 years, it'll grow from 4 million to, it can reach up to 8 million, almost doubling the population.
In the next
15 years.
Okay. Wow.
Right.
8 million people. Okay. 80
Yes.
lakh people.
80 lakh people. Yes. So right now we are sitting in 2025. I'll just give you an example, a quick example. The house next door, I was renting that house from 2021 to 2023. And at that time, exactly around 2 years ago, I gave an offer to a landlord to buy that place for 3 million dirhams.
How many years back?
2 years ago.
2 years ago. Okay.
2 years ago.
3 million dirhams, about 7 CR.
About 7 CR. I gave an offer. The landlord said, again, it was an Indian landlord, had his own business, right? And he said, no, not 3. He said, I'll take 3.2. So we had this discussion and it did not fly. And one day I got to know that someone has bought it for 3.4.
Okay.
Exactly 2 years ago.
Huh.
Okay. Now, do you know how much is the same house worth? Now that same house is worth nearly 5.5.
Wow.
Right? So it's grown like more than around 60% in the last 2 years itself.
Wow.
And if I go back, as you said, if I go back to 2020, when the prices really fell, at that time, the price even fell to around 2 million dirhams, right? So going from 2 to 5.5, so which is nearly 3 times,
Wow.
right? So that's how prices have grown so much. And it's because...
Did you regret not buying it at 3.2?
Yeah, 100%. 100%. So I think I would have retired by now.
This year I had bought it.
Yes. So because of all of these reasons, I believe, right, that Dubai would continue to be a good market. But again, here as well, I would not say that it's all the same oranges. I would not say that, right? So you have to, just like you make any real estate investment in India, here also you need to know certain things of what constitutes a good investment, right?
So let's come to that, right? Which is basically, we're now getting into the microeconomic analysis.
Correct.
Right? So macros are done.
Correct.
I understood. Now let's get to the microeconomic analysis of how to pick a good real estate investment, because you said that generating 15 to 16% capital appreciation is possible here in dirhams. And if I convert that into INR, it becomes up to 18 to 19% as well.
Yes.
And a relatively safe investment because these are physical assets that you're buying.
Yes.
And it is also said that in real estate, you make money at the time when you purchase the property, right? Because if you buy at the right price, it's almost a guarantee that if macroeconomic situation is fine, you will make money, right? So walk me through your step-by-step framework of how you invest in the Dubai real estate market. Because from what I hear, every week there is a new launch happening and these launches are sold out in a day. Yeah, that's what I hear. And there are thousands of builders and more than 50,000 real estate agents selling real estate in Dubai. So how do I declutter the noise and get right to the money-making investments?
So see, first of all, there are different types of real estate here, and I'll focus more on the residential aspect here. So there is properties which are off-plan, and you can talk. There are either apartments or townhouses or villas. What is meant by off-plan is that it's not constructed yet, right? So there are three phases, you could say. One is the launch, when a new project is announced. And then there is, let's say, a period of 3 to 4 years when it's being constructed. And then there is the handover. And after the handover, people move in. You need to understand a few things that you cannot take a mortgage in Dubai almost until it's handed over, right? So this first 3-4 years, there are certain exceptions, but let's say largely speaking, you cannot take a mortgage, right? So what happens typically is that, once a property is about to be handed over, it generates a lot of interest because the buying pool increases significantly, because then you can take a mortgage of 60 to 80%. You just have to do a down payment of 20 to 40%, and then you can get this property, right? So the buyer pool increases a lot. If you're buying at the launch stage or the construction stage, right? So you have to mostly put the money from your own pocket, right? And what also happens is that over this, but if you're able to put this money in during this construction phase, it does gain a lot in value.
Okay.
Right. But let's say it's a 1 million dirham, or which is 2.5 crore apartment, which is launched, let's say in 2025, right? Then it would be likely handed over and in 2029, 4 years from now, right? So in the year 1 and 2, there will not be so much of a gain. Let's say if I've invested in it, I would put, let's say, largely 40% price into it. If it's a million, I would have paid 400,000 dirhams so far in it for the first 1.5 years, right? Till that time, if I want to sell, it's slightly difficult, because someone who anybody comes in, he'll have to pay this 400,000 dirhams to me, because that's what I have paid, right? So the buyer pool is slightly less, right? So if you have the holding ability, a good time to buy is at the time of launch. If you can, if you do not care about withdrawing the money over the 4-year time frame, a great time is to buy at the time of project launch itself, right? And then you can keep continuing to pay 10%, and till the time of handover, right? And you'll see great returns. So if you invest in the right property, it'll gain 50-60% over this time frame. And because you've made these scattered payments, right, it's not very difficult to get, let's say, 10 to 12% annual rate of return through this. 10 to 15% you could make, just because you've made scattered payments, right?
But this is in dirham terms, 10 to 15% growth.
Yes, in dirham terms. And this is by growth, I'd use the word IRR, because it takes into account when you are putting the money, how much you're putting, and when the gain is being realized.
Sure.
Right? Because property price by itself may have risen 50%, but over 4 years, but your IRR would be higher because you did not put all of the money upfront.
Correct.
Right. So that's one approach, is that you come in at the time of the project launch itself, right? But in here, you need to keep a few things in mind. Your money is sort of locked for 3-4 years. You can sell immediately, right? But you may not get a very good premium out of it, especially for the first 2 years. Right. So this is one approach. Second approach is that, and again, please realize that, and I'm directly coming to the conclusion, the property gains the most value after 2 years of launch. So like, suppose the handover, it's in 2029. So the property starts gaining value from 27 onwards. So 2 years before the launch, and for 1 to 2 years after, that's when the maximum growth in price happens, right? So if you are invested in this property for this particular period, you'll make the most gains.
So basically, 2 years before handover, and then maybe a year after, is where I see the maximum growth in the value.
Exactly. So, but the only thing is that, suppose the property is launched in 2025, you can pay these installments. And good thing if you go into the launch is that you can select a particular unit, right? Another scenario which is, you asked for my own strategy. What I like is that trying to get in like once 2 years has gone by and you're still like 18 to 20, 24 months still away from the handover.
Right.
Right. At that point of time, there are certain sellers who cannot make the further payments or they want to take out their money, right? So if you could find a property which is still at sort of the original price. In Dubai, the properties at the time of launch, the price of that, it's called the OP, original price. So if you could get something which is close to the OP plus 2%, OP plus 3%, if you can come in, let's say 18 months before the handover, because that's where the steep growth happens.
Right.
That's the great time to enter. And once you've entered it, at the time of handover, property prices really spike. That's where the most growth happens. Why? Because a lot of new buyers are coming in because they can take a mortgage and they can buy this property of yours, right?
Okay. End users are coming.
End users are coming in. Also, there are certain investors who invest using mortgage. Right. So end users are coming, investors who use mortgage, they are coming in. So the buyer pool is increasing a lot. As I said, most of the people during this 4 period have to be what we call cash investors, which is they have to put money from their own pocket, right? So you reach the handover period, but at that time, it's also not the best time to sell. Why? Because while it has grown a lot in value, but see, on one day, let's say if it's a building of 200 apartments, all of them would become available, right? So there's more supply at that time.
Right.
So you may have competition from other sellers as well, people who have been holding for last 4 years. So at that time, it's also not a good idea to sell. So it's ideal that you wait a bit. Okay. And see, if you can take a mortgage, right, what I would suggest is what you should do is that what's called equity release. So suppose this is $1 million that you got in the apartment at, suppose the property was launched at 1 million dirhams in 2025. And it's supposed to be handed over in 2029. Suppose you get in at 2027 at, let's say, 1.05 million, just a 5%, OP plus 5%, you get in at 1.05 million, right? And then 28 comes, 29 comes, you make the remaining payments. And that at that point, if you've made the right investment, it could be worth almost close to a 1.5 million dirhams, right? Now the property is valued at 1.5 million dirhams. One thing is either you could sell or cash out, but there's a better approach to it. What you could do is, because I believe at that time, there's a lot of sellers in the market because other apartments have also come in. So you should continue holding it for another at least 1 year.
Okay.
In this 1 year, 2-3 things happen. First is you would get a rental of this, at least 6% net yield, right? So if you have made a 1.5 million dirham investment, you'll get, let's say, close to 100,000 dirhams as rent.
Okay.
This is income that you get.
Around 25 lakhs.
Around 25 lakhs, right? You would get 6% of that, right? But importantly, what you could do also is that you could also take a mortgage. So
on a property which is already ready and paid for.
Correct. So that's something which is called equity release. So suppose you have 1.5 million dirhams, you could easily take out 60 to 80%. Let's say you take out 60% out of that, right? So you had so far put in 1.5 million dirhams in the property, right? This is your own cash from your pocket.
No, I put in 1 because 1.5 is the final value.
Exactly.
Right.
Sorry. Yes. So far you had put in 2.5 CR from your own pocket.
Correct. Which is 1 million dirhams.
Which is 1 million dirhams. Property value has increased to 1.5, which is 3.6 CR.
Right.
So from your pocket, it's gone 2.5 CR has gone. This day you decided that, okay, I'll put it on rent. Now the rental will be on the current value of the property, which is 1.5 million dirhams. If it's 1.5 million dirhams, you'll get 6%. As we just discussed, 6%, it's almost 100,000 dirhams, right? 25 lakhs. So on your initial investment of 2.5 CR, now you're getting 25 lakhs as rent, which is 10%. So the yield for you is actually 10%. It's not 6%. Not just that. Now you can do one thing. You can
yield for me is 10% because I put in 1 million dirhams.
Correct.
But it has become 1.5 million dirhams.
Correct.
So on my initial investment,
Correct.
It's a 10% return.
Correct.
Of rental coming
Correct.
in after
Correct.
the property is grown in value.
Correct.
Got it. And the next part, equity release, what is that?
So, and that's the best part, which is, so on your original, you could call return on your equity or return on your cash that you invested, you are getting 10%, correct? As we discussed, 25 lakhs on a 2.5 CR investment.
Right.
The market value of that, it's 3.6, 3.7
Sure.
CR. Now, what you could do, because I believe that there is still the property price, has still room to grow, because as more people come in this community, right, and their friends come in, they'll see, so the demand would grow. And right now there's a lot of supply apartments available to be sold, right? 1 year down the line, there will not be so many apartments, right? And some people who have rented, they want to buy, right? So it's best to sell a year down the line or 2 years down the line, when the remaining community, the surrounding community also grows, right? Typically, when you have a new building, there are in the vicinity, there are also other new buildings, right? So when the ecosystem develops, the price rises, right? Now let's talk about the thing which really changes a lot of things, right? Which is the mortgage. Now, suppose in Dubai, it's very it's easy to get a 60% mortgage, right? In some cases, you can even get 80% mortgage. Let's say 60% mortgage. How that works? The property value, you've put 2.4 CR of your money, right? And ideally speaking, you have gotten in like just 2 years before, right? Because you got something at almost the launch price, right? And typically, if you invest in a good property, it can gain 40 to 50% on the overall price.
On the last 2 years itself.
In the last 2 years, at least 40% it will increase.
Yeah.
Right. And so you've gone from 2.5 CR to almost 3.7 CR,
yeah.
Right? 1 million to 1.5 million dirham you've gone. And you start making this 6% rental on the market value. But the real magic happens is that, if you're able to take a mortgage out of it, or what's called equity release. So the property value right now is, let's say, 3.6, 3.7 CR, and you can take 60% out of it, right?
That's almost 1.8 CR out.
So, no, I'm saying 60%.
Right. Of 3.6, no?
Of 3.6, right? Or let's round the figures for ease of purpose, right? So the property value you entered at 2.5 CR. The property value is, let's say, 3.5 CR. In a good property, that's very much achievable, right? And now you can take out 60% of 3.5 CR. 60% of 3.5 CR, it's 2.1 CR.
Okay.
Right? So you can take your money out 2.1 CR, right? And then you just have to pay 4% interest on this 2.1 CR, right? So what's happened ultimately is that now the money that you have invested in the property, it only remains 40 lakhs. Your money in the property is only 40 lakhs, and you have a property which is worth 3.5 CR, right? And that this 2.1 CR you've taken out, and you can do whatever you want with it, right? You have this property 3.5 CR, and you are getting a rental from this. As we discussed, the rental, it's 25 lakhs as well. And the interest that you'll have, because your mortgage is around 2 CR, so the amount that you'll pay in the first year, it will be around, let's say, 4%. So 4% of 2 CR, it's 10 lakhs. So 10 lakhs you will pay to pay off your EMIs and the interest. And still you are making 25 lakhs as the rent. So 15 lakhs you still gain, right? So now let's look at this situation. Net, you're making 15 lakhs of income every month. And how much?
Every year?
Yes, every year. 15 lakhs of income you're making every year. And how much money you have in the property? Only 40 lakhs is sitting inside, right? So if you think about it, almost 40% is your return on equity at this stage, right? And now suppose you stay in it for another year. If it's reached 3.5 CR, it's very possible that there's there's last 10% gain as well. It goes from 3.5 CR to almost 4 CR, right? And then when you sell it, so then you can pay off your mortgage, right? And then ultimately what you would have done is that for an investment of 2.5 CR, you're selling it at 4 CR, you would have made 1.5 CR as gain in a short span of time. You've made 60% gains out of it. And if you want to continue, you can continue. By the way, if you are like, no, I'm happy with the this net 15 lakhs that I'm getting every month, and I
Right.
just have 40 lakhs invested in it. You're happy with it, right? So you can continue with this thing, with this particular property, because anyways, you've taken out your initial 2.1 here, right? So if I have to summarize it, I say the first investment in Dubai is a bit challenging because, you have to put in upfront some cash, right? But once you have put in some amount, right, then you could release the equity from that. And once that equity release, because as I said, now you have 2.1 CR of equity or of cash in hand, right? You could use that to fund other properties, and this cycle can go on, right?
So this is the kind of compounding game you can play with real estate,
Correct.
which is which is like not imaginable in the world of stock market, like playing
Correct.
these kind of games.
Correct.
So this is how you do it in a very, I would say this is almost like a hack.
Correct.
Like you're hacking the system using financial intelligence,
Correct.
and you're thinking like a professional investor who's only thinking numbers. So it's basically mathematics at
Correct.
the end of the day.
Correct.
And that is a
Correct.
testament to you being an IIT and a consultant, right?
Correct.
Yeah.
But tell me one thing, you talk about stocks. Would anybody give you a loan to invest in stocks?
You will have to give a collateral, but they do give it, but it's not considered as a wise thing to do.
Correct. Why? Because it's a very high interest rate, right?
Right.
But here what happens in Dubai is that if you're a salaried person, you could get 84 times your monthly salary as mortgage, right? And we spoke about it. For example, like very basic salary that someone can get, let's say 20,000 dirhams, right? So he can get 84 times. Even if we just take 80 times of his salary monthly, we take, that's 1.6 million dirhams, right? What that means is that, if I take a property on an 80% mortgage, I can buy a 2 million dirham property. I pay from my pocket 400,000 dirhams, and 1.6 million will be funded by the bank, right? So this is also another way. So for example, in the first scenario that I gave, I assumed that, you have, let's say, some money to buy your first property, right? And like you had some cash to spend over 1 or 2 years of construction period because you wanted to capture the growth that happens during the construction, right? But again, second case is that suppose if I do not have, and you had, let's say, 2.5 CR in your hand, which was available over 2-3 year time frame, and you were able to do this. But suppose if someone does not have this type of money, but if he's working here, what he can do is the other way, which I said, don't invest at the time of construction. You invest at the time of launch. So the same property which we talked about at the time of launch, it became 1.5 million dirhams. I can take a 80% loan.
You mean launch? You mean handover?
I mean handover.
Yeah.
So the same property. See, you entered early because you had this 1 million dirham to spend. Suppose someone does not have this 1 million dirham to spend. What he or she can do is, when the property is handed over, it's valued at 1.5 million. People like yourself would be willing to sell it because you've made your money. So I suppose my salary is 20,000 dirhams. I can take a loan up to 1.6 million. So what I can do, I can take a loan of 1.2 million only, and remaining, so 300,000 dirham. If I have cash, I'll take 300. I will put 300,000 dirhams as the down payment, and then 1.2 million can come from the bank, right? And then I can put again this property on rents, right? When I put this property on rental, I'll get net 6%, and my obligation to the bank is 4% on 1.2 million, right? So still I'll have some amount remaining, which I'll get. So in your case, as we discussed, right, like after paying your interest, you still had like 15 lakhs rupees left every year, right? So in this case also, there'll be some, even after paying all of your EMIs, you would still gain something. But in this case, of course, the gains do not come a lot from this difference of rental minus the EMI. The gains come from the property value. So the property value gains, as we discussed, and which I think in the first 1 or 2 years, property prices do gain. And especially if you have made the right decision, right community, and so on, that will grow. So on your investment of 300,000 dirhams, if this property just increases 20% over the next 2 years, it goes from 1.5 to 1.8. Then you would have made a gain of 300,000 dirham on your equity invested of 300,000 dirhams.
So 100%.
100%, right? 100%.
In 2 years.
And then, of course, there are other ways as well, right? Here, currently, we are sitting in Springs, which is an old community. The villas here were made 20 years ago, right? There are other ways in Dubai market as well, such as you buy a old villa which is not renovated, you buy it, you renovate it, right? And then you sell it at a higher price, right? So there are opportunities like this exist as well. But I think for a general person, I think the first two opportunities that I said,
right,
makes
because you can get in at a smaller investment amount and then still make a higher return on equity using the power of leverage and knowing when to time it properly, and knowing when to sell it properly. It's a very fresh outlook as what most people think of real estate, right? Like a lot of people think that I'm against real estate, but if it is somebody like you, I'll be like, what you're doing is fantastic, right? Because you're not looking at real estate as a end user per se, right? You're not looking at real estate as, hey, I'm going to buy this and then move in and live. A lot of people confuse that as an investment. But if you're doing what you are doing, where you're using the laws of mathematics, using the laws of market demand, market forces, funding from banks, loans, and all of that, you're playing a very complicated game here, which is not very easy to do as well. You need to put in a lot of effort and homework into doing this. But if you're able to do that, then you can get the kind of 40%, 60% return on equity that you're talking about.
Correct. And see, and all of this assumes, I think, 2 or 3 things, because I'm sure the viewers, people would say in the comments that, how can you assume that it's going to grow 10% in the next year? How could you assume that it's going to grow 50% in the construction period, right? So I'll say a couple of things. First of all, when you're buying, you have to know a few things. You need to know the Dubai market quite well. You cannot just go in a expo happening in Mumbai and so it's not applicable to all properties. There is a lot of properties in Dubai that does not yield such numbers. It's not the case, right? Okay, of course, if the markets are well, you will not lose money, but you will not also make this type of money, right? So few things you need to keep in mind. First, of course, you need to do research, right? So research, what is research? Research is that, okay, what developer is it? Is it a tier 1, tier 2 developer in Dubai? The tier 1 developers are the likes of Himar, Nakheel, Miras. So these are some of the top tier 1 developers, right? Second, you need to see the location. What's the location, right? Is it somewhere which is more central or upcoming? What's the reason why people would go, right? Of course, there is more established areas, and for some areas, it's the potential that, okay, this area would come up in the next 2, 3, 4 years, right? So you need to know why this location makes sense. There has to be a moat around that particular thing. So developer, I would say, the location, I would say. See, again, I'm a very conservative investor that ways. So I go for tier 1 developers. I would go for more communities. By communities, I mean which has everything within it, right?
Yeah.
Because that's what does well, which it has malls, hospitals, clinic, schools, parks, green spaces, everything is there. So I believe that's more safe. Location plays a huge role, connectivity of that, proximity to business centers, how center it is. So if you keep those things in mind, right, then you are still quite safe, right? Having said that, like, no one knows how the macro is going to play out, right? But if we also look at historically, see the numbers that I gave you, if you see one thing, right? See, one thing has markets up or down, one thing has stayed the same, which is like, you as long as the rents that you're getting, it's higher than your mortgage payments, you're sorted, right? And we saw that there is a significant delta out there, which is that,
I mean, Dubai is a unique real estate market because of this reason.
Correct. So 6% is you are getting as rent, and only 4% you're paying. So there's significant delta, right? So, and again, rental contracts here are mostly annual contracts, right? So even if there's a dip, only thing is that you should have the ability to hold the apartment. You don't need to sell the apartment, right? So keep holding on to it. You've gotten your rent for the entire next year. You can keep paying your mortgage next year, even if the markets are so down, people lose jobs. But okay, the rent would become like 5%, 4%, but still you're able to pay your mortgages off, right? And that's the scenario of mortgage. But if you have your own money still invested in it, right? In a downturn, if you have the ability to hold on, because markets are known to be cyclical, if it falls, it will come back up. So you can wait for it to come back up and then sell it. Also, another thing, let's take the example that I gave you. You ultimately you had invested just 1 or 1.1 million dirham in the unit, right? At the time of handover, it's already reached 1.5, right? So even if there's a 10% fall or 20%, it will be at 1.2, 1.3, still from the money that you'd invested.
Right.
You're still higher, and
Right.
you're still getting some returns out of it. You're getting rentals out of it, right?
Right.
So overall, I believe that if you are careful in selecting the right units, and units also, I give you some things, but also there are other things as well. For example, things such as that, townhouses and villas, the supply is quite less compared to demand, because Dubai has suddenly become a very family oriented, and historically there were not so many villas and townhouses. So villas and townhouses are supposedly like more resilient compared to one bedrooms, which there are so many in the country. So there are general laws as well that, okay, if you can go for 2 beds and go for villas, townhouses, right, which are more resilient because the supply is a bit less, right? So if you keep those things in mind, you're buying the right developer, location, the type of apartment, then your investment, it's safer than let's say like investing in a tier 3 developer and so on.
So all of this sounds very exciting and interesting, and I can't wait to get started investing in the way that you've said. But how exactly do you do your research, right? Because now that I finished this conversation and millions of people have watched it, they can't just call you up and ask, Paritosh sir, tell me how to do this.
Yes.
Can you give some resources or tools that a common man can start looking into to do the kind of research that you're doing?
Yes. So I think I'll be very, very specific here. So first of all, see, it's because there are so many real estate agencies here, it's quite a well-researched market. And if you just go on Google and look for market reports, you'll recently had come across investment playbooks from an agency called Hoss & Hoss, an agency called Better Homes. So that will give you a sense of the macro situation of how many people are coming in, what units are coming in, what's the supply, what's the townhouses, how many apartments are coming up. So that will give you a good sense, and it will also tell you what are the upcoming areas and what areas are currently doing well. So it's quite well researched. So that's one source. Second is, just like yourself, you are one of the top investment influencers in India. Similarly, in Dubai also, if people search on Instagram, they'll find some real estate influencers. They're also agents, so they could follow them as well. Then people should go on to these real estate portals. Some of the real estate portals where you could look for properties, it's Property Finder, there is Bayouth.com, there is Dubizzle. So there you could see that, okay, which are the properties, what price is it. The great thing with Dubai market is there's a lot of transparency, right? So if you go to this website called DXB Interact, to give you an example, for example, I was recommending you one of the buildings, right, such as Park Field in Dubai Hills Estate. If you just go on dxbinteract.com and you write Park Field, Dubai Hills Estate, it will show you that in the last 1 week, 1 month, 3 months, what actual transactions happened at what price point, right? So it tells you, and not just that, it will also tell you what was the price it was last sold at, what was the price it was launched by the developer. Suppose because Parkfield, for example, it's a property that was launched 4 years ago, and it's just being handed over. So you could go on DXB Interact and you could see that, okay, the property that's selling today, a 1 bed, let's say it's selling at 1.8 million, and you could see that back in 2022 it was launched at 1.2 million, right? So there's a 50% increase in the property price. So DXB Interact, it's a great source as well. Also, as you start doing research, you should connect with some of the agents as well. They can share with you upcoming launches. You can continue visiting the website of the leading developers as well, such as Emaar, Nakhil, Miras, Ellington, Soba. There are a lot of developers that you could visit their website and you could get updates. As well, in Dubai, there are a lot of real estate agencies. It's recommended to work with real estate agents here. And just to add to everybody, like when you are buying a property for 1 million, there will be typically a 6% transaction fee associated with it, 4% for the Dubai land department, and 2% that you pay to the agent who is facilitating the deal.
Right.
But when you're selling it, so typically buyers do pay this 2%, but when you're selling it, the you don't have to pay neither the 4% fee nor the 2%, right? So when you're selling it, it's the cost to you is almost 0%, right? So in the example that I gave you, so when you're just entering in at 1 million, you would approximately pay 1,060,000, 6% that. But when you're selling it at 1.5 million, there's no cost. You'll get 100% of that 1.5 million amount. So this is something that you.
This is how I can do my research and get started into it.
Exactly.
Cool.
Exactly.
Amazing. So I think this was a very detailed masterclass on the Dubai real estate market. I've spoken to a lot of people, honestly, Paritosh, ever since I got interested in this field of Dubai real estate. I've spoken to a lot of people, a lot of brokers, a lot of people living over here. I think the depth and the level to which you have financially engineered this game, I've not spoken to anybody at this level of detailing. It clearly shows why you're such a successful investor in this particular field and why you're willing to put 70% of your money in real estate, because you know your shit, right? So thank you so much for agreeing to reveal all your secrets. I hope more and more people are able to do what you're trying to do and what you are doing successfully. I hope I can do that as well. So would love to invest in whatever you're investing next, for my own personal investment, because I'm convinced with what you're doing. And guys, would love to hear your feedback as well as to what you thought of this entire conversation on the Dubai real estate market. There's a lot of fluff out there, a lot of marketing out there, but I felt like this 1.5 hour conversation that you just listened to, if you've understood everything, you are definitely in the top 0.1% of people who are getting into the game of real estate investing. So you've come till the end. Congratulations. Love to get your feedback in the comment section. Any questions that you felt like I did not answer, please drop them down below. I'll get Paritosh to personally answer them down below. Just kidding. But you can ask their questions down there. I will only answer it. And please let me know about any future guest recommendations that you would like me to get in India, in Dubai, in Singapore, Australia. You let me know who they are. I will fly to them and bring them to you on the screen. Until then, I will see you in the next one. Before you go, guys, if this episode gave you even one insight that made you think differently about money, don't just keep it to yourself. Share it with your friend or family member who could use it too. And if it sparked a new thought or even made you disagree with me, drop a comment below and tell me why. Your critique helps me make these conversations sharper and more useful for you. As long as you have me subscribed, I'll make sure that you walk away with at least one new thing every Wednesday.